like what was it that Mark Twain said? I think, the rumor of my demise has been greatly exaggerated. I mean, everybody's been calling for the market to crash for years and years. I mean, I
Yeah.
remember in 2017 specifically, a lot of the, clients and realtors and were like, oh my God, this is going to crash. This is ridiculous. And um, I didn't really have that opinion. Everybody, there's always a lot of doom and gloom and it, I'm not going to say it's not going to happen. It can. But I mean, we're kind of in a different place right now. We're coming from a position of lots of equity.
Hmm.
So I think they say, I don't know the numbers for sure, but I've heard, that there's like 40% of mortgages are free and clear.
Mm.
So, are free and clear, 40%. So that's, that's a lot. And there's been a historic amount of wealth that has been created in the last years, and it's been transferred. So that wealth has been transferred to the new generations. So, moms and dads and grandmas and grandpas, I mean, you didn't even have to be an astute investor. You just had to buy a property in, you know, the 60s or 70s even. And, you know, you created a lot of wealth.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Kristen, and I'm here with Mark Davis, who is a 30-year mortgage lending expert. So we're going to get into the ins and outs of everything. He has such great experience. Thank you for being here, Mark.
Thank you.
So let's go back to the beginning. How did you get into this line of work?
Probably in the, I want to say, early 90s, real early 90s.
Mhm.
I started as a retail mortgage broker loan officer.
And
And then,
what about the industry drew you to it?
excuse me.
What about,
Well, I mean, it was, basically at that point, it was just pure 100% commission.
right?
So, kind of, and I had freedom, obviously,
Sure.
because you didn't have a salary. So you didn't, nobody could tell you where to be or where to go. So that was interesting to me. And then I always like to have, my, success or failure on me, not
Mm.
on someone else. So
Totally.
even as a youth, I was into kind of sports that weren't, I was a professional motorcycle racer when I was younger. So, I always liked the fact that I had to rely on myself, and I wasn't really that big of a team sports because I played team sports, but when we lost, if I played good.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
But we still lost. That used to kind of, infuriate me. So I wanted it all to be on my shoulders, success
Yeah.
or failure.
Absolutely.
So
I think
that's
that's
why
a
I
really
wanted to help people. I've always kind of focused on the people that couldn't get a traditional loan. So I've always worked when I did originally in retail, I, tried to focus on some of the, back then they didn't really have other sources, but they had a little bit. So I would try to focus on getting people that, needed help and
right,
couldn't just get a cookie cutter loan. They couldn't go into Bank of America and get a loan.
right.
They had to go to a mortgage broker to try to help them, structure the deal. And then as time went on, I worked at the savings and loans, which were kind of the first, non-traditional lenders. So if you went to Bank of America, couldn't get a loan, I'm just using it as an example, but
Yeah.
then you would go to a savings and loan. They were called portfolio lenders. So they would lend their own money and they would hold the mortgages themselves, collect the payments themselves. And so they could make loans that maybe others wouldn't do because, they were the ones holding the actual loan. So that was kind of the first, easier money lenders were the portfolio lenders, SNLs. So there was like World Savings and Loan, Great Western Savings and Loan, Home Savings and Loan. Those were kind of the original, easier underwriting standard lenders. So I worked for them. And then I also worked for some of the, now it's called non-QM, which is non-qualified mortgage. And those would be loans that don't fit into traditional guidelines.
And
So I've always kind of tried to help the people that couldn't go to a normal source.
Yeah. What would constitute as not under a traditional guideline?
Well, I mean, basically anything that can't be sold to Fannie Mae and Freddie Mac, which are your major residential mortgage lending giants. They're government subsidied or quasi-government. So they have a specific set of guidelines, debt to income ratio, credit, and if you don't, and fully documented loans. So in other words, W-2s, pay stubs, tax returns. If you don't fit in all those areas, then you don't get what's called a qualified mortgage. And then, go ahead.
Keep it. Oh, I was going to say it must be really fulfilling and gratifying to work with people and really help them, when the
I mean, it
traditional.
has been through the years. I mean, I bought my first home in 1994, and it was kind of difficult to get a loan.
Right.
We went to Bank of America, I think it was, or one of the big banks at the time, and they said you need 20% down, and we didn't have 20% down at that time, so we needed to lower down payment, and we found actually an REO through Home Savings and Loan, and they had their own financing for that property, and so it was a 10% down. at that time, an adjustable rate mortgage, which not a lot of those nowadays, but so, they helped us.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Qualify that, with only 10% down. So, I kind of experienced it myself, and then, so that was kind of my drive from then on, was I want to help people get loans that maybe, they can't get traditionally. And that's
Absolutely.
kind of what's driven me for the last, 30 years, more than
That's
that,
amazing.
actually.
Yeah, and I think that it's important for people to even know that the options are out there. What do you find a lot of these people who aren't necessarily qualified for a traditional loan, what are the misconceptions? I bet you get a lot of people who just give up.
Probably, they need to probably end up talking to, a mortgage broker.
Mhm.
And then that is somebody that's gonna, place their loan, work with them to get it structured so that they can use non-traditional sources. Since the financial crisis, there has been what's called a ATR, which is ability to repay. So basically, you have to show, in the early 2000s, they had, it was like the Wild West in lending, essentially. And, so they had put an end to that, that caused the financial crisis. But, there's still non-traditional qualifying methods. One for investors is the debt service coverage ratio
Uh-huh.
product. And then for other uh, traditional borrowers, they have bank statement loans where they can take their bank statements and
Uh-huh.
look at those and determine that they have the ability to repay via that, or maybe they can, a lot of times back, even in the early days when World Savings was doing loans, they would say, hey, if your tax returns are, like this high, then, it can be difficult to
Right.
read them, and it's difficult for the lender too. They have to go through all that and look at every single, corporation tax returns, and they can be difficult. And, so they used to say, hey, if you've got really good credit and you've got a sufficient amount of down payment or loan to value, we're going to just, you know, and you've demonstrated the ability to pay your loans in the past,
Uh-huh.
we're going to assume that you can pay it in the future.
Right.
So, a lot of times that, and then, like self-employed income can be pretty tricky as well. A lot of times, you write off things that, y- you actually use. So, your tax guy might say, hey, you're going to have a big tax bill this year. You need to go out and buy something. So you
Uh-huh.
do, and then you get to, maybe it's a big truck that you need to tow your materials in,
Uh-huh.
but you probably use that truck too. So, it's kind of like, hey, we need to write this off. In actuality, you're using that product. So it's income kind of for you, but it's not considered income. It's an expense. So, that lowers your income. Other things, that you purchase, might be like, and they can depreciate things. So depreciation is basically writing down the cost of something that's acquired. In actuality, you're not really spending money when you're depreciating. You've already bought the asset. So you're depreciating the asset. So, that is money that's spent but it's not coming out of your cash flow. But as far as traditional tax returns are concerned and income, it's not shown as income on your tax returns. So therefore, you're not going to be able to qualify on a traditional loan. But, someone that looks at it differently and says, oh, you know what? I mean, they use common sense. So they're like, okay, he's only showing this much income, but
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
he's depreciating all of this. Interest can be an expense as well, which isn't really affecting your cash flow. But ultimately it is, but not on a monthly basis. So those are just things that they look at and try to make sense and say, hey, does this person really have the ability to repay this loan aside from traditional methods?
Amazing. I think that was a lot of really good advice you just gave. I mean, you have such a diversified background as well. You've been in the investment banking world, you're in the wholesale world. You've done a lot of different stuff. So you have a very well-rounded perspective of the whole process.
Yeah. I mean, I've been in investment banking with Morgan Stanley. I've been at just regular banks, savings and loans, consulting work for some private equity firms for due diligence, small business administration, underwriting.
Yeah.
So yeah. And then obviously wholesale, mortgage lending. So
Amazing.
yeah, been kind of touched a little bit of everything through the
Yeah.
years. And I was a licensed real estate agent as well, and did back in the 2008 crisis, the banks got a lot of REOs, so I was an REO agent as well. So sold a ton of real estate owned by the banks.
Right.
And then did some investing back then as well, buying properties, and then also I own a property in couple of properties in Southern California.
Well, that's amazing. I mean, you really do have such a well-rounded expertise on it. And, you've been in the game for long enough. And as you said, you've seen the market go up and down. What's your perspective on the market now for people who are a little hesitant and, hesitant with interest rates?
I mean, it's kind of like, um, like what was it that Mark Twain said? I think, the rumor of my demise has been greatly exaggerated. I mean, everybody's been calling for the market to crash for years and years. I mean, I
Yeah.
remember in 2017 specifically, a lot of the, clients and realtors and were like, oh my God, this is going to crash. This is ridiculous. And I didn't really have that opinion, but everybody, there's always a lot of doom and gloom, and I'm not going to say it's not going to happen. It can. But I mean, we're kind of in a different place right now. We're coming from a position of lots of equity. So I think they say, I don't know the numbers for sure, but I've heard, that there's like 40% of mortgages are free and clear. So, or properties are free and clear, 40%. So that's a lot. And there's been a historic amount of wealth that has been created in the last years, and it's been transferred. So that wealth has been transferred to the new generations. So, moms and dads and grandmas and grandpas, I mean, you didn't even have to be an astute investor. You just had to buy a property in, the 60s or 70s even. And, you know, you created a lot of wealth there. And, so that's being passed on to the new generation. And now we have a lot of wealth that's been created by stock markets. Yes, they go up and down as well. But, if you look at a long-term perspective, they've gone up. So, there's a lot of wealth that's been created in the stock markets. There's a lot of wealth that's been created in the real estate markets. There's a lot of wealth that's been created in the new cryptocurrencies. I'm not an expert in that at all. I'm an old guy, so, that's kind of out of my wheelhouse, but the wealth has been created there. And then, a lot of the technology has created, you could have been a receptionist at Microsoft in the 90s and, you're now a multi-millionaire because of your shares that you were provided, so, I mean, even entry-level jobs, those people have, extreme amounts of wealth now. So there's a lot of wealth sloshing around out there. And, money naturally goes to a good performing asset. It's just, you don't have to make a decision about it. Nobody can tell it what to do. Liquidity naturally follows and goes to a good performing asset. So real estate's still at this point a good performing asset, even if, we dropped 20%, for example. We'd still, I mean, sure, the most recent people would be hurt on that, in the last year or two. If you bought in the last year or two, obviously, that wouldn't be fun. But, if you bought 4 years ago, 20% wouldn't even really dent you. You'd still be in a really good equity position. So I feel like a lot of people nationwide are in extremely good equity positions, because of the values of real estate going up. So, I mean, I don't feel like it's like the financial crisis. We've got the ability to repay law that's been in place. So, the funky mortgages haven't really been happening. The LTVs have been reduced. Remember, those mortgages were, funky qualification wise, and they were zero down. So, nowadays, if you don't qualify in a traditional sense, you have to have a skin in the game. You've got to put, 10, 15, 20, 30, 25, 30% down, not none. So, that has changed the market as well. I don't feel like that, there's a situation of that being, hindering the market. And then also, the amount of equity that everyone does have. I just feel like, people are in a position where they're probably not going to walk away from equity. So, I feel like the market's in a pretty good place. I mean, yeah, the interest rates are high, and yes, it is, prices are high as well. But I mean, take, for example, for investors, I feel like these, 3-unit, 4-unit, 5, 6, 7, 8, 9, 10 unit properties are pretty, even in high value areas, they still cash flow well because rents have risen so much. So, if you have 4 units that are renting at $3,000 a month, that's $12,000 a month in income coming in, and a payment on that property, even though it's a high amount, still way below what you got coming in. So these 3, 4 unit properties, even in places like Southern California, qualify and have plenty of income coming in to make the payments. So does that mean that we're not going to have a downturn? No, I mean, obviously, I mean, we have them. I mean, and there's different reasons for those. So I don't think this one is because of bad lending or, you know, any funny money that was going on in the past. That is not a reason anymore.
Right.
So can the fear and greed get involved? Well, sure they can. I mean, you know, if people get scared, you know, they sell. And let's face it, real estate, just like stocks, just like bonds, there's a buyer and there's a seller. And if there's more sellers than there is buyers, prices go down. If there's more buyers than there is sellers, prices go up.
Hmm.
There's no
Yeah,
denying that in any market, any
definitely.
asset market. So can that happen? Sure. Can people get scared and, you know, there's no buyers? Yeah. But, you know, everybody still kind of wants a piece of the American dream, no matter what everybody says. So, um,
Right.
you know, that undeniably, you know, puts a little bit of a floor in the market. Now, you know, we need probably interest rates to come down to make the prices that are out there are more affordable.
Hmm. Yeah. Well, I mean, I like hearing about optimism in the market, and I think that you have a really great point. And things go up and down all the time, and the best time to get into the game is always now. So this has been awesome. I think you've given people a lot of good advice on just like different options if they're lower income, and you've obviously given such great insights on the market as well. Where can people find you?
Yeah, my phone number is 805-953-7589. And
Amazing.
I'm pretty old school. I answer the phone. So,
Yeah, great.
and I'll leave it with a quote that I truly believe, and that is that it's not timing a market, it's time in a
Mm,
market.
that's really good advice.
So if you hold something for a long period of time, real estate, stocks, bonds, what have you, you're going to
Uh-huh.
do well. If you're
Right.
trying to get in and get out and, you know, time markets, you know, that's a difficult thing to do.
Uh-huh.
Um, So, you know, longer term investments are always a pretty good investment. Um, but I mean, a lot of the investors are nimble and they can get in and get out and, you know, they feel comfortable with that. But for just a normal, you know, long term horizon is the best horizon to make money in all conditions, in all markets.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.